All right, make sure the screen is shared. And yeah, again, if you do have any questions, make sure you type those in. I will say this probably won't be a webinar that chews up an entire hour. We'll probably get out of here at the 45-minute mark, or maybe a little bit earlier. Because again, I just want this to be a good overview and kind of an understanding of what some of these terms are and how they might affect people. So with that said, let's go ahead and get started. Okay, my name's Alex Perny. I've been with Advanta since about the beginning of 2012, so I've been doing this for a little bit over 11 years now, going on my 12th year. I've seen a lot of these different types of investments come to fruition, different ways of people strategizing and structuring different things. If you have any questions or you'd like to get more information, please don't hesitate to reach out to me. I am always happy to help, and all my contact information is listed here on the slide in front of you. Just a quick disclaimer, Advanta IRA and our employees do not provide investment advice, nor do we endorse or promote any product. All information and materials are for educational purposes only, and all parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment. A little bit about Advanta IRA. We're a self-directed IRA plan administrator serving clients nation and actually worldwide as well. We strive to provide exceptional personal service, experience, and knowledge that is paramount in administering these types of IRAs and assets. We've been in business for just going on 20 years now. We administered roughly $2.6 billion of assets under administration. Very proud of that number and about the number of clients we've helped over the past 20 years achieve their goals as well. All clients here have a dedicated personal IRA account management. So if you need any type of assistance, if you're looking to do something new, maybe looking to explore something that has more of an ESG or SRI flair, you're looking to change your investment direction, we're certainly here to help and try to make those goals a reality for you. So just be aware that this is kind of how we operate. If you're not a client listening to this, or if you're someone that wants to get more information, we certainly are very hands-on with how we help our clients, kind of pursue investments and ultimately make and achieve those goals. So what is a self-directed IRA? A lot of people coming into this might be a little bit confused on what exactly a self-directed IRA is, not so much just, hey, what is impact investing? Well, a self-directed IRA gives owners complete control over their retirement funds and investment decisions. So unlike investing with a large wirehouse where you just get a ticker list of different things that you can invest in, and if you want to invest in something outside of that scope, well, too bad, so sad. You're kind of out of luck with that. We allow for clients to invest in really whatever they would like, so long as it's not a publicly traded security, stock bond, or mutual fund. But we allow clients to really dig in and get the true diversity that they need and want for their investment strategies. You can use them to invest in any type of alternative asset, so long as that it doesn't violate any IRS rules, which we'll get to here in a few minutes. But a lot of people that like to do this, especially for impact investing, find it very useful to have something that is as flexible as a self-directed IRA, especially with the nature of a lot of ESG and SRI-focused companies, or at least strategies needing something that is not just focused on the publicly traded stock market. Because when so many of these companies are just beholden to their shareholders and the bottom line, they can tend to get away from some of the principles that people want to invest along when it comes to impact investing. So having a self-directed IRA that can utilize your retirement plan capital to invest in maybe a private company, or maybe directly invest with people that are out there doing these types of activities that you want to be a part of and hopefully make money with, is really paramount to that. And some of the assets that can be included in this on a more broader sense are things like real estate, mortgages and notes, private placements, precious metals, foreign currency, futures, and a lot more. And again, that's more to the kind of high level of what these plans can typically do, what people normally do with investing them. But let's drill down a little bit and look at, some of the things that people invest with in an impact investment criteria. And what is impact investing? It's an investment strategy that aims to produce financial returns while also creating positive social and environmental impact. These investments can range from almost any sector and can vary in size and scope. So impact investing, again, for a very general and broad term, is something that is investing along your personal belief structure of how, something should be achieved in the world, whether that is, common things like renewable energy, whether it is social impact of things like affordable housing. A lot of different things can play into what exactly impact investing means to you, but these are some of the broad strokes of what are factored into that. So just keep that in mind of when you're hearing the word impact investing, you can kind of tailor that to what you need or want it to mean. But if you're talking to someone or out there interacting with someone, again, generally that's kind of how it is determined in the marketplace. And why do people choose impact investing? Well, there's a lot of different reasons why people might choose it. They are looking for a new source of capital for what they are actually doing. So maybe they want to pivot and they feel like they can, if they include more of these types of principles within their investment structure, they might be able to generate more positive impact, not only for the community around them, but also generate more capital coming in. And especially with people that have IRAs that are looking for more long-term structured approach, that can definitely play into that. Some people might also be looking at the investment side, not necessarily the capital raising side, might just be tired of the companies on Wall Street just being beholden to the bottom dollar and their ultimate shareholders as to how they make all their directions when it comes to corporate strategy. Because again, when it comes to what most of the people on Wall Street are doing, it is a bottom line shareholder value play. Now, people are starting to increasingly see that they can make money while also having, some people call it investing with a conscience, can also make money to that effect as well. Not here to say one way is better than another. It's ultimately going to boil down to what makes the client, you, the most comfortable and what means the most to you when it comes to your investment strategy. Are you just trying to make the most money possible, which is certainly a commendable strategy? Are you trying to have some additional impact? Are you trying to create something else besides just a rate of return that is acceptable to you? And then ultimately, why do people choose IRA impact investing? It also has great tax benefits. If you can do this type of investing where you are investing with purpose and for purpose with your IRA funds, you also get to reap the benefits of the social and economic impact of your investment while also not having to pay any taxes or having to pay reduced or deferred taxes as well, and not having to worry about complicated tax filings in order to do so. Now, investing with impact investing or ESG or SRI principles, and we'll get into some of those definitions in a minute, can also definitely have tax implications or tax benefits to the investor when it is outside of an IRA. Being able to claim some of those tax benefits can be a bit burdensome, can be a bit cumbersome, and being able to do it through an automatically tax deferred shelter just makes things a lot easier for people. So where you can kind of see some of the benefit is that you can invest with that purpose and direction while also not having to pay a whole lot of taxes and not having to do a ton of work or be extremely complicated with tax filings in order to take advantage of that. So what are some different types of self-directed plans that you can utilize for this? They are numerous, and we'll get into a few of them and what exactly each one of those means here in a moment. Now, the most common type of self-directed retirement plan that we see is going to be the traditional IRA. The reason for that is that most people are going to have rollovers that come over from old 401ks or old tax-deferred retirement plans, and those are going to land without any tax consequence or penalty into a traditional IRA. So if you have a traditional IRA or you have an old 401k, that's typically where it's going to be bucketed. And again, you can use any of these types of plans that I have listed up here. And for those of you that might just be listening, what I have listed is traditional IRAs, Roth IRAs, SEP IRAs, simple IRAs, individual 401k plans, education savings plans, health savings plans, and any type of old former employer plan as well. All of these different types of plans qualify for doing this type of investing and broader investing as well in a self-directed sense. And I always like to make sure people understand, because there is, for whatever reason, a misconception out there that says, hey, I have this type of investment, I have to be utilizing a Roth IRA, or hey, I have to use a solo 401k for this. It's simply not the case. If you run into an investment that you want to make an impactful investment and you have a Roth IRA or you only have a SEP IRA, they all certainly qualify. So again, let's just kind of go in briefly into each one of these types of plans, what exactly they mean and how they could be of particular benefit one way or another to an individual. Traditional IRAs, again, are great for inheriting all the funds from old retirement plans that have been borne by an employer. So old 401ks, pension plans, 457s, thrift savings. All of those funnel into a traditional IRA without any tax or penalty considerations to the IRS. Now, all of the earnings that you might make from an investment are going to be tax deferred, meaning that once you take money out of the plan, then you would ultimately be taxed on it. But anything that you've done, whether that's investing into renewable energy companies, whether that's investing into companies that are focusing on uh, uh, minority ownership or social governance or something like affordable housing, anything that has to do with that, you would be able to take those profits from those investments, and you're paying taxes ultimately at the end when you're taking it out in retirement, not necessarily at the receipt of the actual investment income. You could also invest through a Roth IRA. Roth IRAs are great because you pay no tax in retirement, but they have the same exact tax benefit of not receiving any taxation when the investments are paying out in the normal life cycle. And that goes for all of these. Typically, you're going to see the deferred taxation on most of these, while some of them, and especially newer ones with the update to the Secure Act, have Roth options, such as a Roth option for a SEP, Roth option for a simple, and a dedicated Roth option now for an individual 401k plan. But in the most case scenario, all of these are going to be tax deferred. Health savings plans are actually kind of an interesting one to look at because you might actually be able to invest your health savings account and be able to pay for your out-of-pocket medical expenses with revenues generated by socially and economically governed investment criteria, which I think is pretty cool. Being able to pay for that kind of stuff and not having to pay taxes while investing with SRI or ESG principles is a pretty cool concept to me in that context. So just keep in mind that any of these different types of plans do qualify for doing impact investing with an IRA. You don't have to have one type or another. It's just mainly coming down to a matter of how much capital do you have in a particular type of plan to be able to do a particular type of investment is most of the time what it's going to boil down to of, hey, which one do I use? Which one do I qualify for? Now, what are some options that people have for investing with impact? Now, there can be a large spectrum of different things that people can do, but some of the big ones I've listed up here. Things that have to do with healthcare. Now, this wouldn't necessarily be like investing into a large health insurer. This would be investing into some type of company or some type of project that would try to, either be making something like healthcare more affordable, bring it to more disenfranchised populations, working overseas to bring healthcare to poorer rural areas, or even domestically as well. We certainly do have, parts of our country here in the United States that definitely need more healthcare infrastructure. But again, that's kind of what the position is for something like that. You could invest in healthcare stocks. You could invest in something like, large pharmaceutical companies like Pfizer or GSK on the stock market, but that really wouldn't be something that would be along the lines of impact investing, and also that would get away from what we're kind of looking at with regard to the private sector investing. So healthcare is definitely a large area where we see a lot of impact investing capital go, because again, people do need more ready access to healthcare. Things like education are another big one. Bringing a different type of educational tools, whether that is help with student loans, different type of lending platforms, things like that. Again, that's a big sector. I would say probably the one that gets the most press that would probably be some type of thing to do with energy, whether that's renewable energy, clean energy, energy storage, because the production of energy is one of the more carbon intensive processes that we see, at least in the manufacturing side of what we consume on a daily basis. So a lot of companies that are focusing on things like solar or new battery technology are a big area where people look to have impactful investments, and it's certainly something that people can do as well. Or even things, one of the more interesting ones that I've seen is biomass companies that are taking basically garbage and the compacting and burning of those as opposed to fossil fuels to create energy is kind of another really interesting one. But again, energy is a big area where people are investing. Renewable resources, so things such as improving the efficiency of recycled materials, the more readily utilized recycled materials in consumer goods. So again, things that you might have already kind of thought about, this is just a new way of saying, hey, let's invest in these types of things. And again, you can kind of put your own flair on any of this. Also, things such as economic, social, and governance structures of different companies is ways that people look to invest in impact investing. Now, what exactly does that mean? That means that the company has set forth in their actual directive, in their actual mission statement, that they are going to focus on the economic impact of the actions of what they're doing, the social impact of what their products are doing in the actual broader marketplace, and the governance of their company, being that they are, ensuring that they are represented by a diverse group of people, whether that is including more just to get more diversity on their boards, their governance. That's basically kind of what ESG goes through. And again, that's kind of on a spectrum, but people do look as the ESG principles of a particular company in determining whether or not it is kind of an impactful investment or not. It doesn't necessarily have to be there. It could be something that you're not necessarily looking at, but it is something that certainly is in the spectrum of impact investing. And also, lastly, you can do a little bit more of a boots on the ground, and we'll get into that as kind of one of the investments in our case studies is lending to people. You don't have to look at this as such a broad topic of saying, hey, I have to pick these different companies. You could pick someone more local to you. And that's one of the great things about utilizing self-directed IRAs in this sense, is that you can either kind of act globally or act locally or do a mixture of both. And it's very easy to do within the same type of tax qualified account. Because if you know someone that is starting up let's say a new recycling venture that is, certainly able to turn a profit, but they need capital to get off the ground, you could lend them money locally out of your IRA and pay no taxes on it. You could also say, hey, we're going to look at doing affordable housing on a house by house basis with my IRA. Again, that's something that you can do on a more local basis. Or if you wanted to kind of put your money out globally, you can do that as well. But just keep in mind that there's a lot of different ways to do this, and we just like to illustrate a couple of the different industries that are, in general, utilizing this type of investment structure. Now, another really great thing that I really enjoy about self-directing is that you get to invest not only with into industries that you know and understand, but with people that you know and trust. Now, again, we're talking about the global aspect of doing some of this stuff when looking at the corporate structures of companies. I know that can get a little bit in the weeds, but what I really do like to look at and understand is the fact that you can do this very locally. And I think that looking at it locally with regard to the people that are around you and what people are investing in is a very powerful way of looking at this type of investing as well. So one of the things that I kind of really try to push is that investing not only with the people you know, but in what you know and understand. You don't have to become an expert on corporate and social governance to actually make impactful investments, to provide an investment structure with maybe a few of your rentals that are focused on affordable housing, or are taking advantage of government voucher programs, or something to that effect. It doesn't necessarily have to be that, but just getting people understanding and thinking about that you can do this if you're interested in it, and it doesn't have to be a complete paradigm shift, but you actually get to do this on a local level as well with the people that you know and trust, is very powerful when it comes to investing in this type of manner. Now, how to get started with a self-directed IRA? Again, I always like to make sure that I cover a little bit of the functionality of this, just so if anyone's new to this, they don't get kind of glossed over on saying, hey, this is great, I have all these old plans, how do I kind of get started with it? What's the mechanism for moving? Because the last thing anyone wants to do is get hit with a bunch of taxes and penalties when it comes to, investing their IRA funds. We want to make sure that we're making a profit. We're also making sure that we're not paying the government more than we actually need to. So making sure you understand the setup to this is also important. So moving funds from one IRA to another, really easy. It's non-taxable, non-reportable. A 401k rollover is reportable, but it's non-taxable. It's just a matter of making sure that the accounts are set up. So basically, you open up the receiving IRA first, have the money transferred over, and then you can move forward with the investment in any way that you see fit. It's also always important to understand prohibited investments when it comes to any type of investing. Now, when it comes to impact investing, it's not as maybe readily apparent as to where you would run across some of these violations, unless you feel that your impact investing would be done with someone in your family. But the prohibited investments that you have to watch out for in any type of IRA investment are going to be life insurance products and collectibles. Now, keep in mind that some types of coins that are traded on their content value, such as American Eagles, Canadian Maple Leaves, things like that, can be purchased within an IRA for their gold content value. But you can't buy antique artworks, rare bottles of wine, things like that with an IRA. Again, not that that would necessarily lead into something that would be a problem with this type of investing, but it's always good to know, have a good basis and understanding of the rules before you begin anything. Some prohibited transactions: any transaction between the plan and a disqualified person. The IRA owner or disqualified person receiving a benefit from the asset of the plan. Now, we'll get into kind of what that actually looks like in a second, but just to be clear, is that there's certain people you can and cannot transact with within an IRA. Now, those people are called disqualified persons. Now, who are they? So for those of you that aren't looking at the nice infographic we have right now, imagine your family tree, draw a line directly up and down from yourself, and those are the individuals that you cannot directly transact with. So mother, father, son, daughter, spouse, legally married spouse. So if you just keep that in mind, is that it has to be a legally married spouse. It doesn't matter, what that means to you in your particular state or where you're at. Legally married spouses are disqualified individuals. So this means that you can't, buy something from them. They can't utilize an asset that is owned by your IRA, such as a rental property, or you can't lend them money, just things like that. I tell people, try to make sure that you're investing outside of your family. Not only is it good for making sure you don't have a very awkward Thanksgiving dinner, but also it just keeps things easier with relation to the IRA and its rules. Now, what you do personally is your own prerogative, but doing things outside of the family, the nuclear family with the IRA, definitely is going to cause you a lot less of a headache. Now, I do get this question, and if no one poses it, or if you're watching this on YouTube, keep in mind that I did mention that it's just directly up and down. Once you move, once removed, so things like cousins, brothers, aunts, uncles, family, friends, those people are fine to deal with. You can deal with those people to your heart's content and twice on Sunday. There's no problem with those people. It's just people that are directly up and down from you. So up and down in the family tree: grandparents, parents, spouse, children, grandkids. Those are the people you can't directly deal with, that can't directly utilize IRA-owned assets of yourself, and you also can't buy or sell anything from them to your IRA. Okay, so let's understand a few of the terms that I've been putting out there throughout this presentation so far. What is impact investing? It's investing with the basic goal of reducing the negative effects on social environment. Well, that's a pretty broad statement. To kind of drill that down, it's investing that's going to make some type of positive impact, not just on your bottom line. So, an easy example of that would be saying that, hey, I'm investing into an energy company. Okay, great. They are going out and, drilling for oil. Okay, great. It's making money. Well, let's say in that same context, I'm investing into an oil company that also subsequently invests in carbon recapture, has impact investing where they are going in and also remediating oil wells and not just selling them back to an open market. That could be a portion of impact investing. Or you could take the other side of that. Again, a lot of this is on a spectrum, and say, hey, instead of investing into non-renewable carbon fuels or fossil fuels, I'm going to invest into renewable energies, such as solar, such as biomass, or anything else like that that might not necessarily be as environmentally impactful. And again, this is just looking at one sector of energy, but reducing the negative effect that one industry might have on a particular, environment, or just the broader sense of the fact of saying, hey, this has a positive impact in some way other than just how much money it makes me. So again, this can mean a lot of different things to a lot of different people, but in general, it has kind of a guiding principle of investing for good. Is kind of the best way that I would put that out there to people, is that investing with some form or fashion that would make an impact in the world around us. Now, ESG stands for environmental, social, and governance. This focuses on the management and general corporate value of a particular company. So the company actually that you would be investing with, or you can apply this to your general investment plan, but again, it's kind of not as correlated with an individual investment. It's kind of an investment principle that you're looking at with companies when you're investing into actual companies, lending to people, buying private stock, things like that. It would be their focus on the actual environmental impact of what they do. So let's say they manufacture plastic cutlery. So maybe instead of them going out and just utilizing poly polyvinyl chlorides or whatever plastics are used to make plastic knives and forks, they go out and say, hey, we're going to make these out of post-consumer recycled plastic, or we're going to make them out of something that is to the point of biodegradability. So again, an ESG company focused on changing something about a current industry, also the social impact of what they have and their governance. So making sure that the impact that they have socially is also impactful. So whether that is price point, whether that is where they are actually marketing their products, how they're marketing their products, or what they're doing, making sure that it has a positive social impact, and then also the governance of the company, making sure that it is a diverse governance board, whether that's including people of different genders, different races. There's a lot of different, again, spectrums of how people identify a matter of ESG, and that's for someone to determine on their own as to kind of how much of that is an importance to them when they're actually doing impact investing. But when someone says ESG, that's kind of a core focus of values that a particular company is going to have on saying, hey, we're going to focus on the environmental impact, we're going to focus on our social impact, and we're going to focus and make sure that we have a diverse governance of our actual entity when we're actually going out there and operating, trying to sell our products, trying to operate in the world. That's what ESG refers to. And again, there's different levels of focus. Some companies might have it as a as kind of a general guiding principle. Some companies might have it as their sole guiding principle. And again, that's for someone to kind of look at and understand. But if someone or a company is saying that they focus on it, it might be something where you can earmark that and go back and look and say, hey, is this something that I feel like fits into my own impact investing criteria? And lastly, SRI, socially responsible investing. It's basically the active elimination or inclusion of investment criteria built on by ESG. And that's for each individual to kind of look at. Different people are going to define SRI differently. So some people might say, hey, even though this company is manufacturing things with post-consumer recycled plastics, my stance on is that we should be eliminating plastics from our market, from everything else. So even though that they're doing something I agree with, I don't necessarily want to be investing with something that produces plastics. And then you define your SRI, your socially responsible investing criteria, even further from that. So impact investing, again, is the very broad umbrella of reducing harm and the negative effects on the social environment. ESG is kind of a corporate look at saying, hey, this is how we're going to structure our company and the values that we're going to put out there. And then SRI is kind of an even further drill down of that, which is mainly the personal philosophy and goal that the investor has to invest in exactly what they want, how socially, what factors of ESG and impact investing you mainly want to focus on building your SRI profile. So what are some types of impact investments that people can make? Investments into ESG-focused companies. That's kind of an easy one, saying, hey, this company has an ESG profile that I agree with. I like, in general, what they're doing, so I'm going to plug some money in with them. Now, this could be a publicly traded company. Publicly traded companies certainly do focus on ESG principles, but maybe not as many as you might find on the private sector, so it's just something to think about. Buying private stock in a solar energy startup. I've seen this kind of play out several different times with different types of startups that are raising capital. Whether or not that they are focused on ESG or not, this might be an impact investment just from the play of saying, hey, I'd like to invest in renewable energy because I believe X, Y, or Z about current energy production. Investing with SRI principles. Again, defining your SRI principles and understanding exactly how you want to make an impact when it comes to investing in the broader marketplace. Investing with those principles is certainly a type of impact investing that can be individual to anyone that wants to pursue that. Buying property for the specific use of affordable housing. That's kind of what I'm going to get into with one of my two case studies, is saying, hey, you can do this and again, provide a benefit of affordable housing. You don't necessarily have to rely on the government or large corporations to do it. You can be the change that you want to be in the world, especially when it comes to investing in real estate, because real estate, as many of our clients have experienced, can be a very viable and very good investment. Again, making sure that it fits into your risk tolerance and your portfolio of what you're looking to do. But again, real estate can be very good for that. Participation with government subsidy vouchers, again, things like Section 8, and lending to individuals who don't normally qualify for home loans or something like that. That can be a very risky endeavor. Again, impact investing doesn't necessarily have to be risky. Just because someone needs capital for a new venture that is on either the ESG spectrum, whether it fits into your SRI profile, whether that is just a general impact investment, just because they're looking for capital doesn't necessarily mean that it has to be a risky investment. It could be, extremely lucrative, but there are, again, ranges of all this. And if someone, maybe needs money and part of your, SRI profile is helping, people less fortunate in your local area, then, there just might be some inherent risks, again, with investing with people that maybe don't have great credit or an ability or a long track record to repay. So again, there's plenty of different types of investments that you can do with this, and it's up to you to kind of determine, hey, what makes the most sense for me. Now, real estate impact investments, can certainly be something that would probably be the more focus of what clients would look for with regard to self-directed IRAs. We have seen a lot of people invest in urban redevelopment zones, long-term rentals, short-term rental projects, rehab projects. Short-term rentals, maybe not so much for impact investing, but it could also certainly be to making sure that people maybe have an affordable option for wherever they're looking to go for short-term rental. That could be something to the effect of saying, hey, not necessarily vacation, but maybe more, filling that gap between a 12-month lease and, someone having to live in a hotel or a motel or something like that. So there's a lot of different strategy that can be used with real estate. And that's one of the reasons why it's so great as an impact investment, is that you can take a piece of real estate and make an impact with it in a multitude of different ways. Whether that is improving it in an impoverished neighborhood to make it a nicer property, to help improve a blighted area, whether that is renting at a reasonable or below market rate while utilizing something like a voucher program from the government to help create that kind of stability for your investment portfolio. And again, all of this again is determined on what you want your profile to be when it comes to investing like this. Things like condos, mobile homes, and mobile home parks, again, can be a great way to help provide affordable housing, because it is really one of the last bastions of affordable housing we have in a lot of areas, especially rural areas, because everyone's moving in. The single family market is just absolutely wild. So being able to provide affordable housing through mobile homes is a fantastic way of looking at things. I highly recommend people look at that. Also buying tax deeds and trying to work with the people that are behind on them to get them repaid and current, not necessarily just trying to get those to where you actually own the deed. That could be another way that people look at impact investing. I would say that maybe is probably a little bit of a less popular option, but it is certainly something that people can do. And then also looking at maybe ESG or SRI focused syndicators or private placements that focus on affordable housing and commercial property or large multifamily properties as well. That's also definitely another way that you can invest with impact with utilizing an IRA and investing in real estate. All right, purchasing rental real estate for impact. So John wants to use some of this 401k from a previous employer to purchase a rental property for Section 8. So he's identified a property. Now, who does what? Again, this can be as simple or as complex as people want to make it. But again, we deal with a lot of real estate, and I think it's important to illustrate how this would kind of work with an IRA. So who does what? So John opens and funds his IRA account. He finds the investment property that he wants to utilize for this particular investment. He makes the offer to purchase the property, and he submits the purchase authorization forms to Advanta. Reason approves all of the documents as well. Now, who does what on Advanta's side? We work with the closing agent to ensure proper titling on all documents. We sign all the documents on behalf of the IRA, wire the funds to closing, and then we receive the deed and copies of all the documents post-closing. So what does this look like per year for the individual? So John here, he has rented the property for $1,200 a month for 2 years. Now the government's paying him $900 a month in Section 8 vouchers, and then the tenant pays the remaining $300 per month. So that's how he's getting his $1,200 a month in net income. John decides in 2 years to sell the property for $170 and makes $50,000 in profit. He has no taxes paid on the $78,000 in total profits, so the rent plus the profits. And now he has $198,000 to go back out to invest. Now, he could have simply just held this property continually, or he could have flipped it. There's really no rhyme or reason. It's what fit into his ESG and his impact investing profile. So again, you can do this many different ways, but Section 8 and voucher programs are a great way for people to kind of get started in the impact investing realm. Now, certainly these things do get a bad rap. And I've had plenty of clients that have done this for many years and had very few problems, but people certainly do have problems with some of these, whether it is properties getting damaged. But I really want to encourage people, take a long look at this. The issues that people normally have are not as prevalent normally, as long as you're doing good due diligence and working locally with people that understand these types of programs and can actually help guide you through them. So just keep that in mind. Just because you may be getting to something, you hear Section 8 is not something to necessarily run away from, but it's important to do research and understand how these programs really work and what is going to really work the best for you. Now, lastly, partnering on a corporate loan. This is another really popular way that people invest, is that lending money to companies that otherwise maybe are trying to get startup. They're not trying to dilute their capital stack, is lending someone money. So Paul and Linda want to partner on a loan to a green energy startup. They each have $100,000 in their IRA, and the company needs $150,000 of funding. So they fire up their IRAs for $75,000 a piece, and they get working on this. So who does what? Again, this is extremely simple in regard to how these things are structured. So they, again, decided that they want to each invest in this startup. They have $100,000. The company needs $150K in funding. So each of them, again, definitely has the 75 in order to invest. So who does what? They open and fund their IRA accounts. They found the investment. So they found the company that needed to actually acquire the capital. They negotiated the terms of the loan. They submitted the purchase authorization forms to Advanta, and they read and approved all of the documents. So Advanta, in this case, works with the closing agent to ensure proper titling on all loan documents. So promissory note, if there's a mortgage or a UCC filing, determining all the applicable documents and making sure that all of those are received in good order. We wire the $150,000 to the company or the escrow agent for close, and then we receive and store all the loan documents. So how exactly is this structured on the loan document? Well, each IRA would be listed as to a 50% individual interest on the loan, which is how the partnership is going to be titled. So that way Paul and Linda each have their respective portion of their $75,000 investment to this company protected and detailed on the loan document. All loan payments will be split between the IRAs with their respective percentages, and the percentages of ownership cannot change if Paul and Linda are disqualified persons. So even if Paul and Linda were, let's say, married, or they were father-daughter, or some type of familial relationship that we covered earlier, they could definitely do this loan together to this particular company. They just couldn't change their percentages of ownership at a later date. So if you're going to be partnering on something like this, it's going to be defined on the actual loan document, and then all payments are going to be split between the IRAs and the respective percentages when it comes back in. Now, that's really all I have to say today on impact investing. I hope people that attended this or listened later on got some value from it. They, maybe started thinking about a different way of investing, understanding some of the terms that they're hearing put out there. I'd encourage people, if you want to learn more about this, always feel free to reach out. We have different events. I've done a podcast with several people on actually doing more ESG and impact investing, so I'd encourage you to look at that. We have bi-weekly events. We have our video library where we catalog all this, and we have our weekly podcast as well as a blog. If you're interested in getting started, it's as easy as just filling out an application. It takes about 15 minutes. We get the account open, work on the transfer, and then you can just start investing. If there's any questions, I'll stick around here for a minute. Again, it was pretty straightforward, but my contact information is up on the list right here. If there's any questions, please fire those out. Otherwise, we'll get you out of here. Thank you very much for joining us today.